Working. Like it's, oh no, it is live streaming. Okay, I'm gonna go to mute.
Good to go, thank you. Right, welcome everyone to this extraordinary Audit and Risk and Finance Committee meeting. And Sue, would you like to open with the karakia, please?
Yes, thank you, Chair. Kia hora te merino, kia whakapapa pūnamu te moana, hei hurahi mā tātou I te rangi nei, aroha atu aroa mai, tātou I a tātou katoa. Kia ora.
Thank you. Kia ora. We've got a full house in terms of the committee members, so there's no apologies. No. Confirmation of the agenda. I'll take the agenda as outlined, so we've got our no change to that, so just confirm. I'm happy to move. Do I have a seconder?
A second.
Yeah. Oh, I think Councillor Aaron raised a hand first. Thank you.
That's fine.
All those in favour, please say aye.
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 Are there any conflicts of interest? There are none. Confirmation of our minutes held on the 14th of September. Do I have a mover, please? Is that Councillor Ron or is it Mayor Craig? Mayor Craig? Do I have a second? Councillor Ash? All those in favour, please say aye.
Aye.
Aye. Our first
Aye.
item of business is the annual report. So what I'll do is I'll ask Jessie to introduce the annual report, give us a bit of a status. Then I'll hand over to Bryce. Welcome, Bryce.
Hello.
And you can talk about the process, the audit process, and then we will go to the questions. Thank you, Jessie.
Thank you, Philip. So yes, annual report 2023. A little summary of that is the income is consistent with council's budget, so that's good news. And the development and financial contributions are still at high levels in the 2023 year. Activity costs were $5 million over budget, reflecting the repairs and remediation that were needed after the storm. Council was reimbursed at 100% subsidies for most of the roading costs, but there were other costs such as clearing trees and pumping out flooded areas where costs had to be borne by council. Turnover was high for staff and recruitment was proving difficulty with many vacancies still not able to be filled. So the additional storm costs were offset by the lower employee costs. Depreciation is much higher this year, and that was as a result of the large amount of assets where construction was now completed and had therefore been moved to fixed assets rather than work in progress. So this difference doesn't impact cash, but will impact our budgets for the long-term plan. Council has a healthy balance sheet with external debt staying at the same levels and term deposits and cash only slightly less than in the prior year. The financial prudence benchmark shows that council is well below what it could borrow. Debtors have decreased from the prior year as we have improved our collection rate, and we've also started reviewing whenua Māori land, ensuring unproductive land has rates remitted. So it has been a challenging year for the finance staff as we are all new, but we have worked well with the auditors, which many of them were new as well. And in addition, central government recognises that the storm meant the council was quite busy, and they're therefore allowing us to do an L long-term plan light version, which covers 3 years instead of 10 years. Deloitte have had some minor issues to complete and will produce a management letter about any findings when adopted at council, but they're not expected to be significant. So, open for questions.
Okay, can I just guess maybe before we ask questions, welcome Bryce. Do you just want to comment on anything relating to the audit in terms of challenges extraordinary items, etc., and any issues. So we can't hear you, Bryce. Right, sorry, you're on mute somewhere. You might have to go to your settings. So while Bryce sorts out his audio, are there any? Still can't. Nope. He's logging back in and logging out again. So while Bryce is coming back in, have we got any specific questions of Jesse? Jesse, can you just talk about the impairment and how that was calculated and what were the impact on the financial? What is it and how it was impacted on the financial statements?
Okay, so the asset impairment is quite a big sort of accounting standard. We did a big memo to the auditors on the impairment that we suffered, but it's something that we can't value, and therefore we can't recognize an impairment in the financial statements. So they did have an impact on our, the weather events had a big impact on the utility and lifespan of our assets. And while we might ordinarily do an impairment adjustment, we haven't because it would take a lot of comprehensive engineering and costing investigations into those assets, and that we just simply don't have reliable information on the overall scale and consequent remediation costs. So we have not impaired anything in the 2023 accounts.
Okay. So just for members understanding, impairment, if you have an event or where your infrastructure suddenly deteriorates, then you are technically required to recognize that loss in the financial statements at year end. The issue is the best example I've used is, if, for example, you've got a vehicle and you have an accident. It's still the car can be repaired, but as of the balance date, you haven't completed the repairs. So the value of the repairs, generally, you should actually recognize in the financial statements to say is my car was worth $30,000. I had an accident. It's going to cost $10,000 to repair, and you should actually write your car down until the repairs are undertaken to the tune of $10,000 as of balance date. Now, what Jesse has said, because of trying to get the data and the reliable cost to do all the works, that wasn't feasible for this financial year. Jonathan, I notice you've got a question.
Oh, yeah, thank you, Mr. Chair. Yeah, I thought that there was a difference between how NZIAS 36 was applied to in the private sector versus local government. So I thought that used to be the case, and this has been a change to the standard. Is someone able to explain?
Okay, maybe Bryce can comment on that.
Can you hear me now?
Yeah, we can hear you now. Thanks, Bryce.
Sorry, I don't know what happened. The whole building went black, and then it's come back up. So maybe I could just I think the question it's the same standard, but the interpretation is a little bit different. So I think our view is that there is some impairment, but it's not material. So back to your point, Philip, is that you think about roads, it goes back to the service potential of the roads. If the road can still be used and it's still doing the function that the road was designed for, then you don't technically need or have to impair it. But even though a road might have lots of potholes, it might be bumpy road or actually not a very nice road, because it can still act as a road, you can't impair it, or you shouldn't impair it. So the issue which management have faced is that there are a few things, not at which stage, which we don't believe are material, which we would think are impaired, and we're talking, we haven't quite finished, probably $500,000 or so. But really, the majority of the situations are you do have assets which aren't as, technical term, flash as they were previously. More potholes, more lumps, more bumps. But because the road can still be used, you can't impair it. And so a lot of the expense or capital expense which management are working through, they're going to be additional assets. They're not repairing the roads. Like when you repair a road, or that's operating capex or an expense, or you're going to have new assets. Like you actually might, like when you come into Mangawhai, you're going to have that road's down to one lane. You have to spend more money on that road. A lot of that road in capital will be a new asset. You're going to put in retaining wall, underfill. So you're going to have, rather than impairing the existing road, you're actually going to build a more resilient road, and that will be a new asset. So there is work that has to be done by management, which is predominantly OPEX rather than CAPEX. The CAPEX that has to be done, I think it's 5 or 6 million off the top of my head. Majority of that will be new CAPEX or new assets. There is an impairment element when you have some bridges which are actually not functioning, which are, I think there's one in the region, but generally the numbers are quite small.
Okay. All right. Unlike the east coast, where they've actually lost a number of bridges and the bridges aren't there, therefore they've actually got significant impairment. Thank you. I've got Councillor Nash, then Councillor Mike, and then Councillor Jonathan again. Councillor Nash, I should say.
Thank you, Philip. Bryce, my question is just if you can a little bit explain on page 17. The second item is asset valuation reserves, which has actually, up to annual plan, we were looking at $116 million less, but in annual report, we have $126 million more. That's number 4A on page 17.
So I think you're that on the annual accounts?
Yeah, so now on the page 17, annual plan said 379 million. The annual report says 495 million, which is 126 more on the asset revaluation. While coming back to the question Deputy Mayor asked, Jonathan Larson, that the state of repair is not so great. I'm just wondering how come the valuation is up by 126 million?
The value, maybe Sue, we can't hear, but the valuation is
Revaluation is I'm asking, Bryce.
Yeah, the revaluation.
Yes.
The revaluation is assuming a cost. It's not taking into account necessarily the state of the road. It's taking into account that if you had to replicate that road today, given the inflationary pressure that New Zealand and Cape Coper has seen, it's sort of saying that today that road would cost 5, 6, 7% more than last year to replicate that. So that revaluation increase you're seeing is nothing to do with the flooding or impairment. That's just saying that road on a like-for-like basis today costs that much more money to build.
Thank you. It doesn't make, obviously I don't have so much sense, but I thought revaluation is one way to jack up the balance sheet as well. Anyway, thank you.
Councillor Mike.
Thank you, Mr. Chair. Bryce, just going back to your reference to Mangawhai Road and the repairs that we've got coming up. So that's going to be a new asset when it's completed. But the road, well, half of it's usable at the moment. So do we, in our books, drop down the value that's accorded to that part of the road? I'm not sure how it exactly goes, but I mean, the value isn't there of that road at the moment, and there will be a whole new cost asset that is applied when that repair is fixed. How do you work around that?
Well, technically, there is an impairment that's the material amount. So what you're sort of saying is, how much is that road worth in my books today?
Yeah.
That small portion. I know the road is still usable. You can still access Mangawhai. I know it's one lane versus two, but the road's still functioning. So you've got a 25-metre section of a road out of a several thousand kilometres or 1,000-kilometre network and saying technically that portion of a road is damaged. So you could say, well, it's in my books at, I don't know, $500,000. So therefore, technically, I could impair that $500,000. So you're not impairing the road, and this is why the numbers aren't as big as when you look in, because it's only a small part of that road. And when you'd impair that, and the issue, the disconnect, which I think is hard to get your head around, is the capex you're seeing today is building a brand new road, a road that's going to be 0 years old, and you're impairing or looking at an asset on your books which is 25 years old. So it's like an old house to build. So even though it might only be in your books at $100,000, say, the cost to replicate that road today might be $1 million.
Yeah.
So what it's going to cost to repair or to rebuild has no potential disconnect, or is disconnected to the cost. So you've got an old house now, might be in your books at $100,000. You want to build a new house. You're going, well, it's still a house, and you're going, yeah, but a new house today might cost you $5 million. So you'll hear management say, I've got $5 million of capex to spend on this new house. But technically, if you had to impair that house, you'd only impair it by 100,000. So it isn't like for like.
Yep. No, that's right. Okay, thank you.
Thank you. Councillor Jonathan?
Yeah, thank you, Mr. Chair. Yes, thanks, Bryce. Could you just clarify for me, in NZIAS 36, obviously we are a public benefit entity.
Yes.
And in introduction at Part C, it says, that the requirement is that public benefit entities elect to account for revaluations of property, plant and equipment on a class of assets basis to recognise impairment losses and reversals on property. So in this instance, presumably we're required to comply with the standard, and could you just clarify, in case I've missed it, how we aren't required to comply in the instance of the road damage?
No, you are required to comply. So you are looking at roading. So you look at each of those classes per your account. So you have to comply. In the case of roading, we're saying that the numbers aren't material. So we will have an error when we finalize it. We'll have an error on our error schedule.
Yeah.
It's very judgmental, but the numbers aren't material. So you're right. The fact, it's like anything, all errors are based upon the standards. So you have to comply, but the numbers aren't material in our heads. And that goes back to the question we had before. The numbers you're seeing are often the new cost to replace an asset, not necessarily the cost which is in your books.
And the judgment in terms of materiality is based on the total asset value across the whole district. And so you're looking at hundreds of millions of dollars versus $500,000 or something.
Yes.
Okay, thank you.
Yeah, just a clarification, right? The plant, property, equipment, as per the financial statements, is $1 billion.
Yeah.
So the question for the councillors who live in the region in particular would be, when you walk around, when you go around the network, and Sue should be adding talking to this, but when you go around the network, where are you finding roads that just aren't working? I know there's a bridge, for example, that's out. I'm not sure of the exact name. So that bridge is it's only in your books, I think, at $300,000. And then really, so you're saying, okay, there's a bridge that's not working, and that needs a bit of stockpiling work to get the back in action. So we're saying, conservatively, we're saying, well, actually, that probably could be an area you should think about it. You've got a few roads which are out, but there's not many roads at 30 June. Bearing in mind, you spend a huge amount of money up until 30 June to restore those networks. So the number might have been quite different at the end of February as it will be 30 June. But at 30 June, there's not a lot of those areas where you actually can't access on a materials scale.
But from a realistic perspective, if we were to look at the decline on our roads from the assets being sweated for the past 15 years or something, if we were to do a real assessment of how functional they are, could we actually find that the impairment was material?
But going back to your point, it's about service potential. So as long as the road is it's not the condition of a road, that's the valuation piece. As long as the road can be used, the fact it's got 5 bumps and it's bumpy, in terms of the standard, it's still usable. It still has got the same service potential. It's just not as nice on a bumpy road as it is on a straight road. And then when you talk about things like potholes, that's not capital spend, that's operational spend, and that a lot of the service potential of your roading is operational spend. That's the maintenance part, I think, which is what you're referring to. But there's been a lot less maintenance on those roading networks, and therefore that's why a lot of the spend you're hearing about will be getting the roading back to a nicer condition versus making the road functional. Maybe Sue, maybe you could add, and you've got the details. Does it answer the question?
That's fine, thanks, Bryce.
Thanks. Councillor Ash.
Thank you, Philip. I just went back because, as I said, I needed to be very clear, and so the other councillors as well. If you look at page 31, there's a one-liner definition of asset revaluation reserves. These reserves relate to the revaluation of the property, plant, and equipment to the fair value. It does not say when it is fixed. I think that is one area, having seen so many financial statements, which is like for inflating the balance sheet, they are valued at a higher rate. So I have a serious concern about this fact. The revaluation means the fair value if as of today, not the value when the potholes are fixed and the roads are resealed. So I need some clear indication on that. If that is the way it is, or that is the way it's meant to be. Thank you.
So I'm just looking at my page 31. I'm not sure what it's under. Has it got another number? Is it?
Yeah.
Well, it says page 31 on PDF, asset revaluation reserves. And everybody should know it. You don't have to actually refer to it. It's a one-liner. These reserves relate to the revaluation of the property, plant, and equipment to their fair value, which is as of today. And that's how we see whether our council has that kind of money which we are trying to show. We have nothing. When we are talking 3 waters or passing it on to another entity, that's the value that I will look at, the fair value, and it's not the fair value. That's what I'm trying to say. If you can little bit elaborate on, it is not as it should be or as it is. Thank you, Bryce.
Can I just help? Because so this is about relating to the revaluation reserve. So
Yeah.
A revaluation is required to say it. So a revaluation takes the gross replacement cost. So that's what a new asset would look like in terms of what Bryce was talking about before, about that new house. So if we had a new house, it would be worth $400,000. But because the house is now 70 years old, we now depreciate that house back down to what its fair value or carrying value, and that might only be $100,000 because the house is so old. And that's basically the state of a lot of our roading assets, as they are so old. And I think that's the point that Bryce was referring to, that the impairment is actually going to improve. So for example, at the moment, using the house as an example, we've got a leaking roof, and we can get by with putting some buckets under it, yes, but the house still works. But the cost of replacing that roof is $200,000, which is basically more than probably the house is worth at the moment. Just as an example.
Totally understand. So all I was saying, if you present the value of Kaipara District Council to be taken over, they will look at the balance sheet, and that is not a fair reflection of what it is. That's all I'm trying to say. Thank you.
Sorry, I don't quite understand where you're heading, Councillor, on that one.
Or maybe we can have a chat later on that.
Yep. Yeah, okay. I think that's appropriate, yes.
Thank
you. Any other questions on the financial statements? Bryce, in terms of the audit, there's no, you've got obviously 1 or 2 things still to work through. Are they significant? And are the numbers likely to change materially as a result of those issues you've still got to work through?
Thank you. So we've got about another week or so of work to go, but we don't believe the numbers will change materially. The revaluations we're just finalising, but the revaluations reflect the valuer's reports. I think the key point is that the 3 water assets haven't been revalued. So the view is that there's been a desktop review done, and that is showing that the assets, may be worth more, but they're not material. Going back to that material concept, which might be the conversation post this. The work we've done around the rates, legislative compliance, and the DCs are fine. So again, not expecting anything to come out of that. The only other point I think of real note is that in terms of what we call as the OAG brief, but it's just a guidance note around areas we need to look at. I think from that perspective, it's really back around the resilience of the network, going back to the flooding perspective. So there's a lot of upcoming costs, as you know, to make the network more resilient, which I think is what you've been a lot of the questions around. A lot of those costs you can't provide for. You can only provide for it once you've got it's happened. So that is important, and it's important to note that those costs would have a real focus when you come to the LTP, even though you're doing an LTP light. And trying to get those costs into that operating capex is important. We've had the 3 water reforms. There will be some disclosure. We'll still have to work around the disclosures to finalise that, and we will in our audit report have what we will emphasise in our audit report reference to those 3 waters in terms of the impact on the go forward basis. Again, that's more an LTP focus. In terms of the accounts, your accounts are prepared as at 30 June, and therefore those assets were held by the council, and therefore there's been no change in terms of the accounting for that. So it's more going forward, your position may change radically if 3 waters goes through. We've had a look at the flooding in terms of, say, the impairment. We do think there is some impairment there, but the numbers I'd probably talked about this before now. The impairment numbers are very different to the capital replacement numbers for the reason we've outlined before. And really, again, it goes back to resilience of network and how do you make sure your assets going forward are resilient. And that sort of, in some ways, dovetails into the Mangawhai wastewater plant in terms of the capital replacement needed going forward. Again, that's going to council soon. Again, more an LTP focus, but we've looked at that and the numbers and tried to understand, the changes. As I say, it's probably more an LTP point, and then following from that is to, the funding, etc. Again, highly dependent upon 3 waters. So 3 waters is really an important piece to your accounts, and again, it's a reason why we will in our audit report refer to that 3 waters commentary. So my question to the council or to the committee would really be to making sure they're very comfortable around that 3 waters commentary, and it covers off all the what you believe as a council is important to readers, to the ratepayers. And of course, obviously, there's always that risk that things may change, but that's the reform in place, and that's the reform you have to report against. But yeah, there'll be a few other things floating around, but we don't think the numbers are going to change significantly or would warrant, if they did, we'll obviously come back to the group, but at this stage, there's nothing significant we've got. Oh, sorry, just the last point. There's a bit of press this morning. I'm sure the mayor's going to get the letter as well, just in terms of drinking water standards and the requirements. So in terms of your SSP, your statement of performance, your drinking water does have will be in terms of performance to the ratepayers, it will be non-compliant. You haven't met all the standard requirements, which is, it sounds like from today's announcements, not dissimilar to a number of councils.
Okay, thank you. Any other questions on the annual report? Okay, with no further questions, I'm suggest that we change the resolution that we recommend to Council the adoption of Part 2 of the annual report for 30th of June 23, Attachment A, subject to any audit adjustments. That therefore, so what we're saying is that then gives staff the ability to agree with audit and then highlight those then to Council when Council formally adopts the annual report. So there's a resolution on, that's my suggested modification. Do I have a mover for that recommendation? Oh, Councillor Ash?
Yeah, I am happy to move.
I'll
Happy
second.
to move. Thank you. Councillor Mike seconded. Any further discussion? All those in favour, please say aye.
Aye.
Aye. Those against, carried. Thank you very much. Well done, staff. So just Sue, when's the council adoption date?
I think it's the 25th of October. Yes.
25th of October. So that meets the statutory deadline.
Yes, it does.
Thank you. That's always good. Right. Thank you, Bryce.
Yeah, thanks very much, Bryce.
Thank you.
Are you going to be there in person to sign the opinion, or are you going to do it remotely?
No, I'll be there. I think it's always good to go.
All right. Okay. Bit of tongue in cheek. All righties.
Thanks,
Okay.
Bryce.
Thank you for that, Bryce.
I know. Thank you.
Thank you.
Bye.
Right. Our next item is item 4, our quarterly debtors report.
And it looks like I'm presenting this because I thought Lani was on. Yeah, I thought Lani was on today. I hadn't realised that.
Sorry, through the chair, Lani is joining us. If you want to give her one moment, I think she should be coming in very shortly.
Thank you. Let give her.
Sorry, she is having trouble getting into the meeting. So Sue, would you mind taking this one over?
Yeah, okay. I haven't read this in depth and probably won't be able to answer your questions. What can I tell you about what's been happening? Well, we think we've got a reasonable hold on debt. And you can see, I think it's on the table on, I think it's page 5 of the report itself, that the debt from last year at this time, the arrears debt, is about the same as this year, which is good. So it's not growing. And you can actually see that the Maori freehold land is reducing as we're getting through some of the debtors there and having the discussions whether the land is unproductive or not. And we're finding that for consideration of writing off the past debt, which gets written off anyway after 6 years, that if there's people living on the site, that they are actually prepared to pay the rates relating to the area around the properties. So that's been good, but we've still got quite a bit to go because, as you can see, there's still quite a high bit of Maori debt. I'm not sure there's anything else I can really comment on. Maybe if there's any specific questions that people had.
Are there any specific questions, Councillor Jonathan?
Oh, thank you, Mr. Chair. I see you're written off 267,000 on the Maori land rates. How much have you actually recovered in rates? Is that in the report?
I don't think it's in the report. I think it was in the last month's report was something like 100,000 we'd recovered. But I know that there hasn't been any large amounts since then. All we've got is basically the commitment to actually pay rates in the future on certain parts of the land rather than none of the land.
Okay, thank you.
Okay. Thank you. Councillor Ash?
Thank you. Just a minute. Can you hear me or not?
Yes,
No.
we can.
Okay, thank you. Chair. No, my question was related to this. You said that there is not an increase in the arrears, and they have actually come down, but the number of mortgage property have gone up by 42. So coming back to the Councillor Larson's question, we need to know actually how much we have recovered, because if you look at the arrears should have gone up, and how much is actually written off. We need to know a little bit of summary at some stage, if possible, so to see what is going on. Is it just writing it off? Because the numbers have increased. Instead of 280 odd, now 300 something. So I mean, or sorry.
Yes, so through the chair. So what I'll explain is with mortgage properties, we recover all of it. If people don't want to pay, in the end, and it's around this time, and I'm pretty sure that our staff are doing it now because they do it at the same time each year. We write to the banks and we say, these 324 people haven't paid their rates, and the bank pays them the money to us. So you'll find that that'll reduce. There'll be nothing in arrears because we'll have been forwarded it from the banks, who just debit the customers' accounts. So we obviously give forewarning and are as helpful as possible to get people to pay their rates.
Okay, thank you.
Councillor Mike.
Thank you, Mr. Chair. Page 9 of this actual report, which is page, I think it's 86 overall, debtors arrears aging, July 31. So we've got significant increases this quarter to July 23, and we had a big increase in April 23. In that quarter, is there something specific going on here that's influencing that? I mean, we're talking significant amounts of money.
Yeah. So what I'd have to do is potentially come back to you on that, because I'm just looking at it, and I don't know the variances. It looks like, yeah, you're right. In April, the 30 days went up, and it could have been because of resource consent. It looks like it could be, it could even be money owed to us by NZTA, or you know, it's basically sometimes that can just do that anomaly, because longer term you can see we seem to be about the same levels.
That's what's sort of
So my experience with other councils at 30th of end of the financial year, that you always get a significant increase in the number of claims for subsidy, and some of those subsidy claims take a little bit longer to work through and don't necessarily get paid immediately. Particularly with NZTA, you've got quite a reasonable window to actually put your claim in for the financial year because of that final financial year wash up, and that potentially could well be it. But if we can confirm and just email to the members would be good.
Yeah, I've written that down. So thank you very much.
Any other questions?
No, that covers it for me.
Covers it. So we've got a recommendation that we note the quarterly debtors report. I'm happy to move. Seconder. Thank you, Councillor Mike. Any further discussion? All those in favour, please say aye.
Aye.
Aye. Those carried. No further business. Sue, would you like to have the closing karakia, please?
Yes, I'll do that. Kia tau nā manaakitanga a te mea nauro, ki runga ki tēnā o tātou, kia mahia te hua makihikihi, kia toi te kupu, toi te aroha, toi te reo Māori, te hei Māori ora. Kia ora, thanks.
Thank you, Sue. Thank you, everyone, for your Friday afternoon. Normally, I do not normally hold council meetings on a Friday afternoon.
No.
Although I've got another one to attend.